Chapter 8, Long-Term and Other Assets. There is a lot in this chapter, but it is pretty simple to follow. There's 3 parts to Chapter 8. Part 1 is physical assets, buildings, equipment, land, and vehicles, also known as property, plant, and equipment. They have a physical substance. Physical assets are depreciated over their useful life. Depreciation is the systematic allocation of the asset's cost to expense. The journal entry to record depreciation is debit depreciation expense and credit accumulated depreciation, which is a contra asset account listed just below and deducted from the physical assets to arrive at book value. Land is never depreciated. Physical assets are all around you. Next time you are in the gym, all those machines, including the evil stair stepper, are assets on the gym's books and being depreciated. Part 2 is intangible assets. Patents, trademarks, copyrights, they all lack physical substance. Intangible assets are amortized over a set number of years. The journal entry to record amortization is to debit amortization expense and credit the intangible asset itself. There is no accumulated account acting as a contra. Intangible assets are all around you too. Imagine the dollar value of the Coca-Cola trademark, or how much a company would have to pay to acquire one of Apple's iPhone or iPad or iPod patents. Part 3 is natural resources. Coal mines, forest land, gas deposits. They are all extracted from the earth, and the process of extraction is known as depletion. The journal entry to record depletion is a debit to depletion expense and a credit to accumulated depletion, similar to accumulated depreciation. Here's my tip for Chapter 8. Think of these entries as adjusting journal entries similar to Chapter 3. Remember the rule: 1 balance sheet account and 1 income statement account in every entry. Also, just for fun, explain each depreciation method to someone close to you and who does not know what they are. If you can explain depreciation, mix in a little amortization, and top it off with depletion in a way that they understand, you have earned the right to be called a fixed asset accountant.